Welcome to Subramani. One question which I have been getting recently is should we continue to invest in our small cap funds? And I have no clear answer for it because the question is, when I looked at my portfolio, I found that my best performing small cap fund was giving me something like 43% return. And I saw it a few days back, so I'm not very sure what is it now. It could be 38, it could be 35. I have no clue. Does it really matter to me? Answer is no. I've been investing in this small cap fund for a very long time. So I have captured this full 43% growth which has given in the last 1 year. It is not as though I've come in later, right? So we in India do not have that weighted return that an investor is getting. How much of this money has come in after the 43% has been achieved, I have no clue. But anyway, small cap funds are booming, are doing well, and if you have been an investor for the last 2-3 years, you have definitely benefited by this full 43% or 38%, the kind of returns that I am seeing. This is the truth, but the thing is, the question to ask is, how does the 3-year and a 5-year look? It's very important to understand how CAGR is calculated. So if you have let's say 7, 3 and 48 as 3 returns, obviously your 3-year, 2-year, 1 year, everything will look great. So remember that. Why is small cap fund, why is the performance looking good even on a 3-year and a 5-year basis? It's simply because last 1 year has been just fabulous. So obviously 1 year, 3-year, 5-year will look good. Small cap companies definitely create wealth in the long run. I've been a beneficiary. I've invested in companies like Carborundum Universal, ESAB, which are all, suddenly I realized these are small cap, or perhaps I'm just going into mid cap. I have benefited, so I'm not saying don't invest. I'm saying small cap funds do create wealth over long periods of time. The question is this a great time to be doing a lump sum? My answer would be no, because you're on the back of a big bull run in the last 1 year. So lump sum no, and SIP yes. But remember that your SIP, you should be able to project that next 10 years you don't need these funds. So let's say you start an SIP with a view that you will do a 10-year SIP or whatever be the amount, 1,000 or 10,000, whatever. You at some stage can't invest for whatever reason, job loss or some other family problems. You should at least not need the money. That's very important. Ideally, you should do a 10-year. When you start a 10-year SIP, you should be doing a 10-year SIP. Unfortunately or fortunately, you're unable to do after 4 years. At least you should have the patience to stick around for 10 years, because maybe in 2033, you'll again get a 43% return. That is a great time to be removing money, because it could have 3-4 years of real bad performance. So whether it is your fund which is giving you 43% or 38%, believe me, between the two there is no great difference in terms of performance. You decide when to exit. So is this a good time to exit? Yes, if you need the money, yes, it's a good time to exit. You want to buy a house, you want to make a down payment, maybe it's a good time to exit your small cap fund instead of exiting your flexi cap or a large cap fund. So largely the answer is yes, you should do your SIP, continue your SIP. You should not stop your SIP because the market is high. Market could go higher, market could go lower. However, if you need cash either today or 3 months later, 6 months later, even maybe a year later, it's a great time to be removing money, because next year again can't be another 43% followed by 43% or 43% followed by 38%. I'm not saying it can't happen, but since you need the money, it's not very sensible thing to let it remain there and let it fall and then pull your hair for why did I not remove the money. If you had got 12% return, I would have said okay, you can hold on for some more time before you remove. From 43% or 38%, it is time to remove partially at least, perhaps, especially if you need. I have no need for that money. I am not going to remove my money. Having said that, it is very important to know how to invest in these specialized funds, which are say a pharma fund or an infra fund or even a small cap fund. These are narrow markets into which they invest. The best time to buy these funds, especially as a lump sum, is when everybody hates it and everybody tells you, oh, post-COVID pharma industry is doing very badly, you should not be invested. See, it has given only -8% return in the last 1 year. See the 3-year, 5-year, it has been a very poor performer, so you should not be investing in pharma fund. Just remove the word pharma, put healthcare, put infrastructure, put aviation, put doesn't really, banking, doesn't matter. The fund, the industry which is doing very badly is the best industry to invest, especially in these kind of funds, which means you should be buying a share or buying a fund which is a specialized fund like an infra fund or a pharma fund, only when it has got a pathetic looking 3-year, 5-year and 1-year track record. That is the time when it is going to perform well. It's like the US funds. I think I started investing in 2012. Few years there was nothing happening. I remember at the launch of one of the US funds, the US markets were doing very badly over 10 years, and the fund manager even went on record saying that is exactly why this fund should be invested in now. So is this the best time to invest in a small cap fund? My answer is no. Definitely not a lump sum. Yes, a longish SIP, as I said, 10 years, and the fact that in case something happens to it, in case it has to be interrupted, at least just stop, don't withdraw, right? Don't withdraw when the times are bad. So if you have that ability, if you have that, if you are sure that you have a longish runway in which you are going to be investing for a long period of time, like for me, it's very simple. If I start a smallish SIP of say 5,000 rupees in a small cap fund today, at no stage of my life will I need to touch it. I can just let it run for 30-40 years, right? So like my small cap fund is running for the last 20 years. So for me, it wouldn't really matter, and I'm continuing my SIP. I may remove money once in a while, but I'm continuing my SIP. That doesn't change, right? So some of these things, if you do, it's not a bad time to enter. I also don't like some fund houses which say, oh, now the market is overheated, you should not be investing. I think that is the investor's call, not the fund manager's call. It's not for my fund manager. Yes, if I have a portfolio manager, he has a right to tell me, no, you are over allocated in equity, so put some money in debt. Yes, he has a job, right? He's my portfolio manager. However, my fund manager has to invest in the companies in which he says he will invest, right? It's like a restaurateur coming and telling you, oh, you've eaten one vada sambar, you cannot eat a rava masala dosa on top of that. It is too much for you. It's not your business, right? It's not your business. Your business is to serve. There could be somebody who could eat vada sambar, rava masala dosa and a masala dosa and have coffee over and above that. It is none of your business. The portfolio allocation should be done by the portfolio manager. The fund manager's job is to manage the funds. So when a fund manager tells you that I don't want money at this stage, he's actually saying, I don't know how to manage money at this stage because I'm getting too much money. So for me, a fund manager does not have to give me those signals. It is for the portfolio manager, my portfolio advisor, who has to tell me how much I should put in equity, how much I should put in debt, how much in small cap, mid cap, flexi cap. It is not for the fund house to decide. Having said that, I also know that fund managers have a duty to say when you should put and when you should not put. And they all start with the caveat, we do not know how the market has to be timed, which means we do not know whether it is a good time to, when is a good time to buy and when is a good time to sell. So please do keep doing your SIPs. So if I want to start my SIP, I am allowed to do that, provided I have a upper cap. To me, as a fund manager, I think my people are communicating to me by writing a check. I will not stop it. Well, it's up to each fund house to decide, because many fund houses have stopped. Some fund houses may restart in another 3-4 months. Some big fund houses don't stop. So it's of course their call. I am anti-fund manager stopping. It is the job of the investor or the investment advisor to decide when to put, whether to put, where to put, why to put, right? It is not the fund manager's job. His job is to manage. His job is to find more and more avenues to invest. Or you say, no, I am unable to find avenues to invest, so I am not investing. That's a different thing. Anyway, it gets a little controversial about whether fund manager should do a timing call. So I do think you can invest in a small cap fund, do an SIP, have a very clear 10-year view, and don't get carried away by the 3-year, 5-year return. The 3-year, 5-year return is made to look good by the last 1 year's fabulous performance. If you take, there will be times when the drawdown is too deep and you could have lost money. So is this money which a person with 2 crores of retirement corpus go and put into it for doing an SWP? No, this is not the place for doing that, right? So so you have to be careful about you. It is not about the small cap or the mid cap. You see what are your requirements and be careful. Thank you.